Good morning, everyone. Welcome to the London session on TopstepTV. My name is Deeyana Angelo. I've been trading futures for about 12 years now, but I've actually been trading for 16 years before I went into futures. And I specialize in crude oil and gold mainly, with occasional ES trade. Usually for power hour. Okay, so let's have a look at what we have so we can set this day up. The trade that I did in this combine was a Nikkei trade actually overnight. I noticed something that some levels that we were hitting that I've been watching, and then I decided to run a hypothesis, so it worked out. And yeah, let's see if we can get these couple of combines that are going into some XFAs. So I'm looking at crude oil now. I'm going to start on a very large time frame just to have a look at where we are. So obviously on the weekly chart we have broken through some relevant lows that were in place since last year, since last December. And I'm not sure how far this goes. Doesn't go far enough. But if I look at the continuous chart, I will actually, there was some demand levels on the weekly chart at 65s. So 65 remains an area of interest, but there are some developments on slightly lower time frames that we have right now. Going down to the daily chart, this dash line that I have here, that's actually the weekly average range low. So weekly AWR, average weekly range low. And there's been some reaction from that area. When I look at the day time frame and the profiles, I'm just going to mark an area of supply here as well, because I can see that on the daily chart. Let's take one line like this, and I'm going to change that into more of a kind of a red line just to give it a bit more weight. And I'm also going to make it solid. Okay, so that's now an area of supply. So that's daily supply. It's not an originating area, it's more like a speed bump on the way. But for intraday purposes, if we do get up there, again, that remains a sell zone. So 68.14, somewhere around that area, remains a sell zone. Now, let's go down to a 4-hour chart. This is something I do every day, by the way. It's just like sit down, look at levels. So before we even start to trade, we need some levels. So I know that the weekly average range low was around 66.08. So let's just call it 66. But 66.50 yesterday, intraday, as I was watching it, was definitely a resistance area. So now, potentially, if we get to 66.50 all the way down to 66, I would be looking for sort of buy and longs in that. So that would be my buy zone effectively. So I'm going to put a rectangle. Let's put it like this. Okay. And there's also a little demand area. If I go to just look at the visible profile range, you will also see that there's an area of balance there, and then a little low volume area that we're going through right now. And then again, a balanced area where that supply is. So all of that is giving me the same type of information. Now, when we drop down to the 30-minute chart and the day time frame, I have some levels that we might be able to use. So value area low from London, yesterday's London. So it's a shortened calculation just from London open up to COMEX open. So I cut off the London session value area calculations once NYMEX begins trading, right? And I have that value low at 67.67. That's a nice little area. So 67.67. And I'm going to put that in Let's do sort of like a purple color. So that one is value low. And then value high, 68.26. 68.26. There we go. And that's value high. In the middle of the value, I do have average session range. Again, from the London calculation at 67.87. If we get all the way up there. 67.87. I'm going to make that blue. Let's do a brighter blue so we can see it. And then I'm also going to make it into a dashed line to kind of delineate from some of the other levels that are not averages. So that's average session range high from the London session for now. And then not too far from there, I have the overall 24-hour average range at 68.11. So a lot of confluences around that area. Okay, so let me go back to this chart here. 68.11. Let's put another line there. And maybe make that green. Or should we do green? Maybe do, what sort of color should I do on this one? Let's see. Maybe do yellow. Just to, so that's the whole 24-hour average daily range high. So that's supply, value high, average high, like that. There's a whole bunch of stuff happening up above the 68 if we can get up there, right? However, there is one little caveat here. So we are opening London a little bit too far out. We're opening about 1.4% away from value. Now, if we look at some stats regarding the opens and which size values fill, you will see that the full value area gap fill, it's not that great when that gap is over 1%, and especially not great if it goes up to about 1.3, 1.5%. So we're right around that bigger gap size. So I'm not necessarily expecting us to reach all the way up there. This is crude oil. It's moving. It's back. So I'm very happy about that. However, if we don't manage to get any momentum all the way up there, then these levels are not going to matter all that much. And in that case, you need to have some sort of a backup plan of what you're going to do, and to have the story kind of planned out for both parties. And right now, one thing that I can see is potentially a failed auction based on this initial balance, and also around this low volume zone. So low volume zone is similar to a single print, but usually taken from a slightly larger area. If I seem a little bit slow today, I did wake up sneezing, so I don't know whether I've got a cold or what, but yeah, I literally just spent like half an hour like sneezing my lungs out. Luckily it stopped just before the live stream. But yeah, so I'm, a little bit groggy today. So yeah, up at this area we were kind of failing the auction is a low volume node. So thanks to this big drop off a cliff from yesterday, we're having trouble at the moment right at that area. So there's some value in shorts, but I want to see whether they can actually get out of that area first. And then if that's the case, obviously 66.50 is the next stopping point. In fact, maybe we can run, what would the size of the stop be needed? Okay, it's a little bit meh at the moment. If I manage to get a slightly higher price, maybe closer to 67, I may have a little failed auction short here. And then I might have enough profit margin down to these 66.50s. But for now, this has fallen a little bit too far out for me. So effectively, I'm looking at a failed auction after a test of the low volume node from a slightly bigger outlook. But yeah, if we can maybe retest that 67 area or somewhere there, I can limit my risk. Again, this new high that we've just created at 67.19, and there will be market generated information, market structure that we can kind of fall back on to limit risk. I mean, I suppose if I use a wider stop, I could maybe run a 30 tick stop in this situation, but for now, it's still early days. All right, let's see who's around. Let's see what sort of questions we've got. Okay, so first question is, how do you watch a continuous chart on Topstep? I'm not sure you can, truthfully, because, all I see is here just like crude oil, micro crude oil, but these are all front month contracts, so I'm not exactly certain whether that is possible. But again, that would be a question for maybe Robert Cooney when they all come back next week. As you know, we have Dakota 3-day takeover. It's going to be a marathon session for Dakota in the next 3 days. I'm going to be joining him tomorrow for the final 2 hours of the broadcast. So from about 1 p.m. Central, which is 7 p.m. my time, all the way through to the end of the power hour. Okay, so Dips M says, do you change these lines every day? No. So I mean, obviously there's new market generated information, but it's always going to be the same references. So while the lines may change, I do have my own charting with my own Bloodtick indicators that I use from AM Futures, MetaTrader 5. I've been using it for, ever since I got the indicators commissioned, which was back in 2015. So, for a long time I've had a charting package that just works for me, and we even have a backtest mode directly on the chart. Doesn't erase candles, but it shows you all the levels, profile, literally everything that you want to see almost in as it was happening at that time. So it's very useful for quick hypothesis checks. So that's what I use. So over there, I don't have to do this manually. It just does it for me. And I can just look at it at a glance. But obviously, we don't have our indicators for Topstep. I have to put in my levels manually. But yeah. For me, Topstep is more of an execution platform. I've always maintained different charting platforms and different execution platforms, simply because when you're drawing tools and stuff, sometimes I had this problem in TraderVate where you would click on the chart and then it would just put random orders there. It's I don't want that. Why are you doing that? And I couldn't really find a way to switch that off either. And that's obviously very dangerous, right? So if you're going to be an accidental trader, that's not a very good thing. And then you end up in positions that you never intended to be on, and you're what happened there? So I've always tried to maintain a separate charting package and a separate instance even of that platform if I'm using the same one for charting. It's just a fallback sort of mechanism, whatever. Right, so we are getting a little bit of fall through. We're in the middle of the initial balance now. So in fact, let me mark off the initial balance too, just so that we know what we're talking about. So style. Let's use this border. And then maybe, can I maybe fill it in? Just to make it look a little bit more like my other charts. So yeah, we've had a bit of an extension here I can't wait until TPO profile comes to Topstep, to be honest. So yeah, now we're failing the auction. So this was the initial balance. These two candles is failing the auction. So there is a setup here. I actually quite like these for scalps. The only thing I don't like is the size of the stop that I would need to use here. So I am going to wait and see what happens until the end of this period. Okay. So we have another question. So yeah, I was on the previous question. Do you change these lines every day? So technically, yes, the levels of interest, supply and demands, value areas and all of that, they will be ever so slightly different every day. But they're always the same things in my case. So it's always going to be supplies and demands of 4 hours and daily charts, average session and daily ranges, sometimes even weekly ranges in the cases where we kind of jumped off a cliff and went to much bigger time frames. And then I will have the value areas from the previous session, and those are kind of my orientation points. I do have other things that I'm watching sort of intraday, but that's more relevant probably for the NYMEX session than it is for London, because those levels tend to work better during the active trading hours, and they relate to option expiries that I like to look at around 10 a.m. Eastern, 9 a.m. Central, and that's 3 p.m. London time. Why? Because those sorts of levels can cause huge reversals or act as a springboard for further movement at that particular time of day, because there's some option expiries in Canadian dollar, but then we now also have option expiries in crude oil. Those have been weighing a lot more on the prices since COVID. They never used to have that much effect, and I think some of the weirdness that we are seeing in crude oil is partially due to a lot more people trading those. So definitely something to look out for, like gamma levels, coal and put supports and resistance areas. All of that can be a driver for the price, but I'm not going to go into that because it's kind of like another layer on whatever you do already or whatever I do already. So that low volume area is still holding. But again, there is a little, so you see this speed bump. So we went up, consolidated with doji, then went up again. That represents a little demand area. So I just want to see whether that can actually break down a bit. And if it cannot, then we're going to have a possibility to run that failed auction. All right, let's try one short here. And I'm going to go to the full chart. Of course, I've done the analysis on micros here. Okay, so let me get another chart here. Side by side. Here we go. And then my stop. And then the target around that 6650 area. There's some levels from yesterday. That's not that valid anymore. Right, so this is now a failed auction attempt, or a failed auction short from that low volume area. And after I reached the round number of 67, so my entry is like 3 ticks below that, and we'll see whether we can get some traction. Really, I want to see this little speed bump breaking down. For now, it's causing some passive buying, but we really need that to hold in order for the shorts to be valid. If not, we're going to go higher, and then I don't really want to see anything as a setup until we've kind of broken through 67.45. And then I would like to maybe see a breakdown back to the initial balance high and then maybe a partial gap fill. So we'll see how that works out. I'm going to jump to a higher time frame here just to keep an eye on everything. Just see how that's framed. Okay. Jarf says, hello coach, please explain to us the value open, difference between the gap up and gap down, open below value, inside range. Okay, so gap up, gap down, fairly simple. You open below value, that's gap down, right? You open above value, that's gap up. You open inside value, guess what? It's inside, yeah? Inside day. There are differences between a smaller gap and a larger gap. They carry its own implications. The larger the gap, the less likely that it's going to fill, although not impossible. Anything can happen. And when it comes to the inside open, so you're opening inside balance from yesterday, inside yesterday's distribution curve, that carries a high possibility of a range-bound day. Not always, because some of the biggest days that I've seen do start off as an inside day, then the price breaks out of them, and then just goes into a big move. But, you know, usually there are some signs of when that starts happening. Typically, you won't have this sort of non-committal movement up and then sell-off and then doji. Where are we going? Nobody knows. Let's go back up. Now we're going down. So it's value rejections typically start with decisive movement. So let's say this open inside value as a hypothesis, and then it just push up, push. So it builds momentum on the run up to the value edge before it actually breaks out of it. So that's kind of how I look at it. So if I'm going to hypothesize a value rejection setup where we go outside of value and keep going, I want to see that build up of momentum already from the other side. I don't want it being like sketchy, if that makes sense. So that's, you know, that's pretty much it. I call the open sentiment in relation to the value. Obviously, the open sentiment matters. What is open sentiment? It is the most likely direction that the price may take. So if we're opening below value with a reasonable gap, but sort of within 1% distance from the nearest edge of value, the outer edge, that means that there's more chances. I can't talk today. That means there's higher chance of a gap fill, full gap fill. Anything bigger than that and statistics start to break down. So this is why it's okay to try it from another level. It will depend on the product and on the underlying trend. So for example, if you have a large gap down in equities, whilst we have a very strong trend, that would lend itself better to a full gap fill, even if it's a large gap. But if we are in an uptrend and we open with a very large gap up, so you open above value, it's like probably won't get a fill. And then you need alternative areas that you're going to look out for. To confirm the failed auction, you wait for the current candle to close. You wait for the 30-minute bar to close back inside it. Now, I want to see it closing confidently, not closing on the nose of initial balance high. But we really need to see it like actually falling into the value area. Sorry, the initial balance. Initial balance, yeah. And yes, Plottic indicator does plot all of these automatically. You can see all the supplies, all the demands, all the value areas, all the Plottic DR levels, which is the daily ranges and stuff. And they're very customizable, which is why I use them. So I don't need to do anything else apart from like click a couple of buttons and I have all of my levels. So it does cut down the mundanity of, you know, having to draw lines and demands and everything. So it's much easier, much less labor intensive, let's put it that way. Kasoon says, don't you reckon if the storm grows in strength, it will affect oil positively? Honestly, that is, we're looking at the general condition of crude oil. And the biggest thing that's affecting it is the weak Chinese economy. It has nothing to do with a random storm that's probably going to blow over. And yes, some of the producers will be closing down for the storm. But, how long is that going to last? Once the storm is over, it will be all open. So I'm not sure how much. Like yesterday, they had the storm news as well. Look at how much we fell. Like, does that matter much? So I think there are kind of greater forces maybe at play. Today we have the inventories. We're going to see what happens. And inventory is never my favorite day to trade, as you guys know already. But yeah, we'll see what happens. It might be just another storm in a teacup, might be a complete recovery of the move that we had yesterday. I never really find much value in it seems that whatever OPEC Plus says, whatever the news comes out, it's very short-lived. It's almost like they kind of take in the information for about 5 minutes, and then it's almost like they're like Drew Barrymore in 51st Dates. It's like, what happened? We can't remember. And then it just does whatever it's going to do technically. So that's been kind of the name of the game of crude oil for the majority of the decade, and then some, that I've been trading in. The only time that I've seen crude oil actually get affected properly is either if you have a refinery in Iraq getting shut down because of the conflict, outright just shut down. That was actually one of my biggest days in crude oil. That was $86,000 I made that day, so that was pretty nice. It's a weird one. It should be more sensitive to risk, but ever since COVID, doesn't matter what's happening, they just it's in its own story. It's like, well, I'm just going to do whatever I'm going to do, right? So this is why I've been looking more at technicals than anything. I mean, crude oil is a pretty technical instrument anyways. So we've had news from the Middle East, we've had everything. Technically, we should be up at the high prices, right? But there's geopolitical instability. There's worries about, the supply of crude oil. There was worry about, geopolitical instability over the elections. Then Biden quit. Then we had Trump, attempted assassination. There was so many things that should have brought oil back up. And yet here we are 67, 66, and 65. What is going on? So if you were to subscribe to the theory that crude oil goes up during geopolitical risks and goes down in times of everything being peachy, it just doesn't work practically. From what I empirically, from me trading it for so long, it just doesn't work that way. It seems to have a mind of its own, right? Okay, so it's attempting to go higher, and this is now a no-go zone for me here. So we go 1 minute until the 30-minute chart closes. So if they don't do anything in 1 minute, I'm going to close this out, and then see whether we can wait a little bit and not get involved in these levels, because I don't like this area for longs. I had this area marked more for shorts, and then the next short area is not really up until much higher up into these 785, 68s. So I don't have any levels here that I can fall back on, because this is now going to go possibly into a bit of a messy gap fill, unless we fail the auction again. And if we don't, I've literally got nothing here. I don't like playing gap fills when they look this messy because of these wicks. So it's a very undecided movement. If we're going to go into gap fill, I want to see it a bit more decisive. Okay, so I'm closing that down. And let's wait. There's no setup here at the moment. Failed auctions is something that I like to do for London. So the possibility now is that we wait for another half an hour and then you get a failed auction. So a late failed auction. That would be the best case scenario for me. Or we just carry on, which is a low probability trade at this point. And then we reach some of the statistical areas that I have marked up. So 67, well, all the way from 67, 67, and then up to 68.11. So it's like a 30, 40 tick area where I want to look for shorts. Okay, let me go back. Dipsam says, first day in the 50k XFA, any advice you can give me not to blow it? I just size down. Like if it's your first time doing the XFAs, you know, the chances of you keeping them successfully are probably pretty low, because everyone will blow up an XFA. You know, it depends how you approach them. But if it's your first time, then maybe just size down and just try to weather it out, you know, for the first couple of weeks on a very small size. It's a 50k, so just do like 1 micro and try to keep it. I suppose not, you know, making money is like an after effect. So if you try to keep an XFA for as long as possible without making a massive hole in it, that's a goal in and of itself. And that should be your first goal, right? So that's the only thing I can say there. Try not to do too much trading, you know, maybe take star setups. So yeah, just like normal stuff that, you know, people generally don't follow. So Joe also says that if possible, take a look at ES during the US session yesterday. There was a strong move to the downside, then it started grinding to the... I actually think yesterday was pretty easy to read in ES, if you have the right sort of idea. So let's have a look at ES while I wait for my levels. One of the things that I don't want to do is try and chase scalps just for the sake of trading while I'm live. So I try the high probability trade that usually I try, which is like the failed auction at the start of London on crude oil. We don't have that yet. So in the past, I have been guilty of trying to get more trades even though my levels are not there. So that's going to stop. Okay, ES. Let's go back. I'm just going to mark off some levels here. So here's how I would approach this particular product, just like I approach things all the time. So I know that if you go back quite a while, there was this area that was broken, right? So there was some sort of low that got smacked through. So that was your broken low that could turn into a resistance. Lo and behold, here we have the New York Open from... Was this the New York Open? Yeah. Hold on. Let me just make sure that I'm looking at the right things. Yeah, okay. So here's the London session. So I always reference the previous session for my decision making. If we're opening somewhere sort of near that area. So we have these two areas as an initial balance for London. And then the London makes a nice high and goes down. So I'm going to mark that off too. So that's London high. Let's write down some text. Then we have London low. And I will show you why this is important. So previous session high, previous session low. And then we know that we have some supplies up here from that smacked through the previous resistance that does get revisited a little bit later. But here's what I wanted to explain. When you have the previous session high, previous session low, I also know that ADR high as an average session range for London high were also around here. In fact, the ADR high was just here. So I'm going to write that down. And then you will see how the orientation points actually work out. And where was the value? Okay. Okay. So if you look at where these moves that are, you know, supposedly very difficult, whipped up, whipped down. But I think the problem with a lot of people is that they just don't have enough reference points that are valid, right? So here's the power of statistics. So ADR high and average session range high, lows. They're statistical measures. They're like very simple statistical measures that just, you know, have their own place. On most normal days, they will be reactive. Sometimes they get overshot, but generally they have some sort of a reaction from them, especially on the first touch. If you put the London high and London low into the mix, now in this particular day, we kind of opened just inside the London range, tried to go higher. We went smack into the ADR high. During the initial balance, we went all the way down, tested the London low to the tick, and then failed the auction. So for me, the only trade here, like this one would have been hard to catch because it's very difficult during the initial balance. They work, but you would have to like be very quick and staring at things. And at, you know, at almost 44 years of age, you know, my brain doesn't work as fast anymore. So I need a slightly slower pace. So because of that, I would have been looking at the London low as a potential area for longs, but then really probably wouldn't have caught it up until the failed auction here. Sometimes I like to front run these trades if I do have a good reference area, such as this one. Sometimes it would be an outer value edge. We didn't have that because the value high was higher up. But generally this was what happened, right? Straight into ADR high, all the way down to London low, failed auction, boom. Neutral day into resistance, previous resistance, around ADR high, yet another reversal, which again would have been a high probability range-bound trade down to VWAP, and then into the move higher, right? So that's something that tends to repeat itself on a lot of the days. Now, this was... yeah, this was a couple of days ago. So now that you know that, because I was actually going over this the other day, actually just yesterday with someone. So now that you know the reference points of London high, London low, sometimes it's Asia high, Asia low, right? It depends how the whole thing sets up. And let's now look at yesterday. So that's what you're looking for. You're looking for London high, London low, stop run through one of those levels, and then orientation points. So similarly, what we had, so let me just plop all of my levels here. I know it's a bit labor intensive, but it will be useful. So we had stop run into stop run through the London highs all the way up to London average session range high, like literally just like kind of like copy paste with slightly different ranges, but you know, still a very, very similar outlook. All right, so let me just drag all the levels now. Oh, it would be easier if I can just show you this on the other chart, but hey ho. Okay, so London. Here we go. London high. London low. And then we had average session range from London. So that's now slightly different, but average session range from London is equally reactive, especially during the initial balance. And then I'm just going to mark off the initial balances for both of them. So again, very similar. We go up, establish a nice range, and then again, touches the average session range low, average session range high, goes all the way to smash through the London low, and then again fails the auction, right? So literally copy paste Tuesday, copy paste Monday, copy paste Tuesday, right? It's very, very, very similar. So when you have these sorts of reference points, you're less likely to look completely lost, right? You're less likely to just go, what and why? And again, neutral day type at some point of the day, because we extended the initial balance already to the downside, failed the auction, did the full auction fade, then created a neutral day around, again, that average session range high from London, and then went into yet another sell-off, right? So neutral day sell-off, which usually for me means a target somewhere in the middle. So yeah, copy paste Monday, copy paste Tuesday, same thing. So stop runs through London highs, London lows into relevant levels, then a reversal as a failed auction, and then into neutral day. So to me, those look the same. Like, you know, it's actually, out of all the days that we had, to me, that looks pretty similar, right? And I can appreciate that for maybe some more novice traders, it would be like very difficult, and they would be like, oh my god, what's happening? But that's because you're chasing momentum setups, right? You're not looking at the structure of the market, you're chasing momentum setups, and you're like, oh, this is crap price action. Is it though? Because to me, this is actually lovely to trade, because it's a two-sided market. One-sided markets for me are a pain, right? I don't like them, because how do you limit risk? Whereas this way, you go up to the London average session range high, you reverse. How do you limit risk? You have a bearish engulfing on a 30-minute chart with a good reference level, you go short, right? And so similarly here, you know, you smash through London low, you create a morning star. How do you limit risk? Well, you have two options. The riskier option is to put your stop right underneath the candle bodies. If you have, you know, some space and budget, you can even place your stop loss below the entire market structure, so below the low. Sometimes that's not possible because these candles can be pretty large. But where did this turn around? It turned around at London low area. So just by marking off the previous session highs and lows, it can give you a pretty decent reference of what's going on. And then you have the initial balance as a reference. Are we extending the auction? Are we failing the auction? You failed the auction? On a lot of the days, it's very unlikely that it's going to go into yet another sell-off. Sometimes it does, okay? Sometimes it does. But if it fails the auction, the likelihood is it's going to go higher. And here you may have even looked at VWAP to be reclaimed and then just to grab a bit of a scalp through. And then again, you have that reversal, neutral day, good way to limit risk. And then you just go into a sell-off towards sort of the end of the day if there is time. This one would have been more of a scalp because we created that neutral day very late in the day and there was not many ticks to be had. So you could have maybe just scalped it from a low time frame because this is a 30-minute chart. There was an opportunity to look for some sellers on order flow, looking at Bookmap or something. And it was a 55 round number, so 55 evens. Definitely something to look out for. There's a lot of option expiries with that kind of a strike price. And then you can just fish for sellers to step back in, But yeah, you have to have good reference areas, good reference points, and a decent understanding of actually what we have going on. So yeah, Joe, hopefully this helps. So marking off the previous day's highs and lows, and then expecting sort of stop runs through them into statistical averages is something that I like to play a lot. I don't like trading the equities during the day time frame. I do read it very well though. However, it's just not my favorite thing to trade for that part of the day because I'm a crude oil trader. And I try to focus on my main instruments during the main trading session, especially around about that time when it's like post and my cut, so 10 a.m. New York. A lot of interesting things happen in crude oil, and I want to be in on that. And to me, ES not nearly as interesting. So I like to focus on ES once crude oil shuts down. So you have settlement in crude oil at 2:30 p.m. Eastern, 1:30 p.m. Central, which in London is very late at 7:30 p.m. And then I will focus on ES. So that's usually when I look for sort of scalpy movements like this. Sometimes they're a lot bigger, sometimes if I'm really kind of watching it maybe from my 6 p.m., I might be able to catch more movement. But for the most part, my time of day for ES would be after 7:30 when my main product shuts down. Joe also says, can we call the failed auction? And what was the cause of the reversal? So yeah, I already answered that. So it was smashed through the London lows, which happens a lot. And then even though it didn't fail the auction immediately, it created a very nice reversal. And then if you want to nitpick, well, it failed the auction at 54.77.75. That was the failure of the auction. That's why I said that when it reclaimed VWAP or started reclaiming VWAP, you could have had a failed auction trade higher. A little bit risky because you are looking at a supply on a 30-minute chart here. However, it's an equity index and it goes up, right? So it's a little less risky to do that on ES than it is on something like crude oil. Carlson says, Senorita Deeyana, do you trade NASDAQ? Not very often. I don't like the drama of NASDAQ. I am somebody who's been trading for a very long time. And NASDAQ is like a toddler without any developed motor skills to me. That's how I look at NASDAQ. I like to assign personalities to every product that I trade. So NASDAQ to me, with the fact that you need to look at ES and a whole bunch of other things that are completely not related to actual NQ price, it tells you a lot about the product. And the whole dramatic movements, 50 points through a level, then we reclaim it, then we do random stop runs of levels that do not matter at all. It's not a product that I gravitate to. If you were watching Linda Raschke, who's one of the biggest traders in the world, her hedge fund was ranked, I think, 17th in the entire world by performance. Somebody who knows what she's talking about. She never mentioned NQ one time during the interview. I just found that very interesting. She mentioned corn, which is like probably one of the slowest things you will ever trade aside from bonds. So she mentioned corn, and she mentioned a whole bunch of other stuff, but she never once mentioned NQ. And you will notice that Hogue doesn't like it. You will notice that none of us who have been trading for any length of time. We don't like NASDAQ. And in fact, I have some of my coaching clients. They've just decided to move away from NASDAQ as well. They all went to trading YM. So there's a reason for that. You just get tired of the mental exhaustion that comes with trading NQ. At some point, you trade it for like 4 or 5 years and you'll just be like, man, I just can't. Like, I've had enough. I know that a lot of you are probably quite a bit younger than me, and you probably still have young brains that are like, full of energy, and you can kind of handle more stress. But once you get to a certain age, you're just going to be like, no. And, I get that I look younger, but, on the inside, I'm probably about 100 years old at this point after doing this for like 16, 17 years. Michelle Ryan has a very good question. Does CPI affect crude prices? Yeah, I mean, inflation will obviously affect crude oil, but does it go absolutely bonkers during the CPI release? Not as much as ES and gold. So if you're looking for like action in the afterglow of CPI, you're not going to find it in crude oil, especially not on an inventories day. So today, expect a little bit of like kind of jerky movement in crude oil, but it's not going to be, an immediate reaction and some mad trend right after. So that's not how crude oil reacts. But is there a knock-on effect, like when we look at macro? Absolutely. Inflation, interest rates, all of that will carry an after effect on crude oil pricing, right? And it's not something that's going to happen on the day. It's kind of like a relationship that sort of shows up as the inflation maybe goes higher or lower. They will adjust for with the interest rate cuts or hikes, and then you may see an effect on crude prices. From what I remember, I think there's an inverse relationship with the interest rates on crude oil, or was it with inflation? It's too early for fundamentals. But yeah, there is definitely a correlation of sorts, or big correlation between inflation and crude oil. So a rise in crude oil prices will also contribute to inflation, right? So effectively, the lower the crude oil, technically inflation should go lower as well. But, that's like perfect case scenario. There's like a cause and effect thing that happens. So let's just focus on crude oil here, because it's arriving in that area of balance soon. I don't think I'm going to get another trade here if we don't get to 67 area. So we'll just have to leave the levels and see what happens. Let's have a look at more questions. Terra Nagra says, hello. I was just wondering if you could show me how to scale out of contracts when I'm in a trade. Okay, so let's just I'm going to have to do a trade here. Okay, we're on a combine, so we're all right. Let me go down to the 30-minute chart. Let's go into crude oil. So I'm going to still hypothesize. God, what do we have? So let's see. Let's try short again. So I'm going to go in. God, I'm going to derail this combine now. I'm going to go in with, let's say, 3 contracts, right? Just going to increase the stop here to something sensible so that I don't get whipped out. And then let's say that we're aiming for the same sort of a trade. Now, if you want to scale out, right? So let's say that the prices start going in your favor. So we are short. In order to scale out, you will need to right-click and then do a limit buy effectively at prices that you want to scale out at. So let's say limit buy 1 at, for example, 67.10. Then right-click again and let's say another limit buy. So it's always an opposing order. If you're selling, your other orders will be the opposite to whatever you're doing. So if you're selling, you're going to have limit buys to scale out. And then, you keep the final one here. If you want to scale out to the upside, similar thing, but you're going to have to use stop buy order. So let's say that I want to scale out. Oops, I've just scaled out by accident. Hold on. So let's sell another one. So I've got 3. But let's say that this thing starts moving against you. And then you want to scale out, let's say here. So you go stop buy. So I'm just going to put it very close to the price, and I'm going to go down so that we can see when that kicks off. So now stop market buy is going to act as a scaling out order, right? So I'm hoping I'm good. So, I'm going to get this. Just wait. Now this is going to work out. And it's not even going to touch my stop market buy, and I can't show you. Yeah, so typical. You're trying to make a trade go against you. What does it do? It goes in your favor. Yeah, thanks. We should all just invert charts and just trade against what we're seeing. No, but there is a value here in shorts. It's the same idea, short from that stop area. So I just want to get this to trigger so that it gets me out of a contract. So I can show you how that works. Let's place a stop buy closer to the current price. Here we go. So now the stop buy stop has taken me out. So now I only have 2 contracts left. Okay. And that's how you would scale out. So you do have to do it manually. I don't know whether they've done it on the orders yet, but that would be the idea. So that would be the idea of effectively just going in and putting the either limit buys against your order, or if you're buying, if you're long, you would need a limit sell. So it's always an opposite order, and then you just kind of plop them on the chart. Now, obviously, these are not OCOs. They're not orders that will get taken out of the market. So for example, if I were to shut this down, these limit buys will stay. So what you need to do is to click on cancel all, and then it's going to clear it out. Don't forget to do that, okay? Because they're not one cancels other. They're just unconnected orders. So if you forget that you have them on the chart, you've exited the trade early and whatever, and you just leave them on the chart, just beware that they will stay until you clear them. That's actually how one of my traders, when I was trying to start my own prop firm a million years ago, this was before COVID, and I woke up and there was minus 13K for overnight trade, and I was like, what's going on? And the guy was like, oh no, I forgot an order. And I did the same a couple times as well, so it was painful. So yeah, we're all a little bit scarred about leaving things on the ladder. So, you kind of click flatten all, cancel quite a few times just to make sure that there's no orders left. All right, Joe also says, follow-on question regarding failed auction. Based on your explanation, the current candle did not close where you were front-running a failed auction. Correct. That's why I closed the trade early. I didn't wait for it to hit my stop. And most of my stops are usually disaster stops that I don't intend the price to touch them. They're just there to give me time to see whether I'm right or wrong. And then if I'm right, I will leave it because there's nothing left to manage. However, if the trade starts going against me, I get a bit impatient with that because that's not what I want to see. And then I will only give it between sort of 17 up to 22 ticks against me, right? But my core size of the stop loss is actually 35 ticks in crude oil. Anything lower than that, it's basically because I can limit the risk or because I can have the market structure that will give me the opportunity to run a slightly smaller stop size, but I'm still not going to be using 5 and 10 tick stops, okay? My stops on crude oil are 24 to 40 ticks usually, And then if I can limit risk below 35 ticks, that's brilliant. But I base all of my risk models on the 35 tick stops, and 2 are multiples, so 70 tick targets. What time is the news event today? I believe it is 1:30 my time, but I'm going to check that. Yeah, so CPI is 1:30 p.m. London time today. If you are in the States, if you are in Chicago, that will be 7:30. Yeah, so that will be 7:30 Chicago time, Central, and then 8:30 Eastern. So it's going to be an hour before the actual cash session begins, and you're going to have a lot of movement and craziness. So try not to trade into that. If you're going to trade it, trade the aftermath, right? Don't hold positions into it. That's just like gambling. Can we look at gold, please? Okay, so I'm not going to look at gold. It is range bound today, like completely range bound. So, I mean, I'll look at it, but it's ugly. I don't see anything in gold. It's still in the balance area, still stuck in the initial balance from London. Initiative players have not turned up. They're waiting for CPI. So you're not going to see much movement there until right before CPI, I think, today. So yeah. Nothing's changed in gold from a larger time frame. Still ugly. Disgusting. Look at that. Do not want to trade that. I don't know what possessed me yesterday to do a trade of gold. So yeah, I then moved on to crude oil, and it was much better. But yeah, gold, something needs to happen. Like, let's hope that this CPI shakes things out, gives us some new levels. I'm still looking at 25 evens for shorts, for longs, or for the breakdown of that entire move. And I'm also looking at 26 evens, so 2600 for potential shorts. So would be expecting more all-time highs, and then maybe if we start to get a sell-off around 2600s, that might be something to get involved in. But this, no thanks. All right, guys. So that would be it for now. Okay, Yarden says, where can I find what's the ADR high? There are other indicators out there, but our one is dynamically calculated based on GMT midnight. If you want to have a look at my channel, so you have below this video, there's like a whole bunch of links and one of them is to my YouTube channel. So if you go to my YouTube channel, underneath any of my Market Stalker D videos, there is Blatic indicator links under there, so you can have a look at that. We currently only do MetaTrader 5 indicators for AMP futures, so just bear that in mind. And it is the real futures contracts from CQG data, so that's what that references. But yeah, so if you don't want to calculate it yourself with time series data, there are some indicators, but I've noticed that they calculated wrong. I don't know what they're doing, but some people calculate the ADR from like midnight open plus the ADR number. It's like, no, that's that's not it. And you're never going to have that reached unless you have a single direction day, in which case that level is going to get broken anyways. So it's like, it's a totally different thing. So what our indicator does, it effectively takes in the current price plus or minus the average daily range, and then it calculates it either from midnight for the 24-hour or from the relevant session start, which is customizable. So then as the day creates new highs and lows, or as the session creates new highs and lows, we're adding that number until one side is exhausted. Okay, so until one side exhausted. That's why I say it's dynamically calculated. And I don't know whether they have dynamically calculated ADRs on any of them, because every time I look at them, I'm like, that's wrong. So yeah, it's another reason why I decided to get into that line of business, because I felt there was a need for somebody to actually properly code some of these things. So yeah. Wicked entry. How often do you refresh your ADR ASR? Well, ADR is once per day. So it's just from GMT midnight. Now, every session range, it starts with each new session. So if you started during London, it's going to get cut off for the cash session. But I still keep the ASR high and low from London, because they can be very reactive during the first sort of hour of the cash session. So they're good levels to keep track of. But yeah, so as soon as the new session starts, a SR recalculates, right? It starts another calculation. When it comes to the period that I'm using, which is your next question, and will be the last question for the day, that period is usually 10 or 14. However, when you have an abnormal week, like we've had recently in equities and commodities across the board, I do smooth it out to 40. So it really depends. You know, you have to take some common sense into consideration there, because you're like, okay, so I had an abnormal week, and you know, equities don't normally shoot up like 1 million ticks per day. There is generally a range that happens over and over. So whenever we go over that and it holds for a week, that's going to affect the data. So you have to take account of that and smooth out the indicator to sort of minimize the effect of that particular data set. But yeah, it's just, that's what I think about. So yeah, most of the time it would be either a period of 10 days, 14 days, and then it just calculates that. Anyways, guys, that is it. There will be a Dakota takeover today for the next 3 days. So enjoy I think he's going to have rips on as well. So it's going to be a pretty cool takeover. I'm going to be joining Dakota tomorrow, possibly Friday as well. Again, I keep forgetting to touch base with him about that. But yeah, I'm going to shoot him a message to confirm. I'm definitely on tomorrow from 1 p.m. Central all the way till the electronic close. So I'm going to be hanging with Dakota and all of you guys. So yeah, enjoy. Thank you so much for being here. Make sure to like and subscribe. And I will see you again for tomorrow's final session of the week. But then obviously you're going to see me with Dakota later on. All right, guys, that is it. Take care. Don't hold anything into the CPI release. Trade the aftermath. That's it. I'll see you tomorrow.